Well, welcome everybody here to Nashville. Thanks for making it in. I'm sure it wasn't an easy journey for some of you. I endured that yesterday too. Welcome to the Bitcoin ETF panel here. I have Nitin and Anthony with me here. By way of introduction, I'm Patrick McAvoy, Managing Director at Canaccord Genuity, global investment bank, and been involved with crypto since 2015 when GBTC was first launched. First day I traded that trust, it had $24 million of AUM. So it's been a really fun journey for me personally to watch that that grow into the world's first Bitcoin ETF and usher in this unbelievable wave of capital enthusiasm for the space in general. Nitin.
Yeah, thank you. First of all, glad to be here. My name is Nitin, engineer at heart. I build systems. I was at IBM, so ex-IBM. Joined State Street, spent 2 years to understand a whole lot of mid-office, back-office in terms of as a global head of digital asset and technology design. And I learned a lot in the process, and I just launched a company called LedgerLink, and the idea behind that is to be able to provide integration framework between the old world and the new world, hence the term LedgerLink, linking the old and new, simply to sort of harmonize an operational framework for a financial institution and bank, which means make it easier without changing anything for financial institutions to consume and adopt tokenized assets. Glad to be here.
Same. Thank you for having us. My name is Anthony Bassili. I'm at Coinbase Institutional. I head the asset allocators business. I spend about half my time on advising institutional allocators on their digital asset allocation strategy. The other half is on tokenization strategy for the firm. Like Nitin and Patrick, I also spent a long time in TradFi. I was at BlackRock prior to coming to Coinbase in 2021, and I spent most of my career serving institutional allocators globally with their portfolio construction processes using different products around the world. And when I left, I was head of pensions for iShares. So for me, the journey has really been a conversation about how do you approach portfolio construction, how do you achieve outsized returns, how do you manage diversification for these big, large institutional pools of capital. So I'm glad to talk about the journey of Bitcoin ETFs today.
Yeah, let's get into it. We sit here today in a much different place than we were just a year ago, and I think we'd all agree, no matter where you stand on Bitcoin ETFs, that the industry is in a much better place with a lot of tailwinds for once, which it's been a long time since we've had tailwinds. Whether you like these products or not, these ETF products, they've created an almost insatiable demand and bid to the market, which has been, very welcome for anybody that likes to see prices go higher. It's engaging institutions, from wealth management platforms to hedge funds to long onlys for the first time in my career. I'm seeing new money. We're going to hear from Anthony about this in a little bit, but let's just, real quick set the stage for how successful this has been. I mean, this is the most successful ETF launch in history. 7 weeks to get to $10 billion. Previously, the fastest fund to $10 billion was 2 years, which is just amazing to think about. We've orange-pilled Larry Fink and Stan Druckenmiller. Trump alluded the other day, whether you believe him or not, that Jamie Dimon may even be, changing his tune to the asset class, which I think would be welcome to many of us that have watched him talk out of one side of his mouth when we know he's got 250 employees working on blockchain and crypto internally, and he even gave ETFs out at a JP Morgan event a couple years ago. It's a winner-take-most game in this ETF space. There's no doubt about it. But I think, it's been really fun to watch people, great people like Bitwise make a big splash and, with a crypto native bent to it and in a way to give back to the industry. That's been just, personally really rewarding for me. I love those guys. And if you're not following Matt Hogan's research, please do. And we have to remember ETFs are the most preferred and well-known wrapper in the world. And so we're sitting here at the precipice of wealth management and RIA platforms, which manage $30 trillion in the United States, just starting to embrace this ETF asset class. So I'm really excited about it. And so, Anthony, let's start with you. Institutional adoption of Bitcoin and ETFs. I mean, this has been, from my seat, enormously significant, but sitting at Coinbase, you have a different viewpoint. Could you talk a little bit about what you're seeing?
Yeah, absolutely. So Coinbase does a lot of things, but we do a couple things really well. The first is we're an infrastructure provider. So if you think about the exchange where most of the retail participants go and trade, that also includes market makers and other participants that are making markets or actively trading different digital assets. The institutional business started in 2018, mostly as custody, and now it's evolved into today supporting over $100 billion of digital assets. In custody, we support venture funds, hedge funds, allocators, market makers, other broker distribution platforms. We're a sub-custodian for a number of other partners, and ultimately the market continues to build for their customers who want to trade digital assets and they want to store them and use the infrastructure that we've built. So for the ETF market, we're serving the same role, right? We are a custodian, and we were fortunate to be selected to manage 8 of the 11 of the Bitcoin ETFs when those launched, and nearly almost 100% of the Ethereum ETFs that are now live as well. So it's a really big milestone for us as an institutional player to be recognized by the industry of the largest asset managers in the world, where they're ready to launch these products and they want to select a preferred partner in that space. In terms of the institutional adoption, Bitcoin has largely been a retail conversation for many years, and then it evolved into something a little bit more alpha generative from hedge funds and venture funds and others from an institutional perspective. And only now are we seeing the asset itself be wrapped by the ETF technology, and that's what it is. It's a financial technology that makes it really easy for other investors, like retail and institutional investors, to get access to it. Why is this important? It's important because the ETF category started in the 90s, and now it's a $10+ trillion category that has tremendous market infrastructure built around it. So ETFs, generally speaking, allow you to get exposure to all things across equities, passive and active, all things across fixed income, passive and active, slice and dice into really specific portfolio exposures. And you can get a whole slew of niche and novel exposures within the ETF category. This does a lot for our advisors who are trying to build diversity and uncorrelated returns into their client portfolios. They now can think about this with Bitcoin, right, and Ethereum. And it's a big milestone because for a long time, portfolio construction has largely been relegated to equities and bonds, and then equities, bonds, maybe some hedge funds and alternatives like private credit and others have emerged into the fold. And here we are in 2024, and we've added another asset class called Bitcoin and crypto. This doesn't happen very often.
No.
And so it's a big deal, and the ETF has unlocked that. You're not seeing mutual funds, pop up. No one's talking about that. You're not seeing other things. But we do expect this to be a multi-product category. Institutional investors choose the product they want. They might want ETFs, they might want futures, they might want options. And what's great about ETFs is they have swaps, they have options, and they have other products built on top of them. So we think this is really great. It's a scaling factor for the crypto industry, and we're pumped about that.
Totally. And just for context for the crowd, I think the largest ETF in the world is like high 400 billions, maybe around $500 billion. Right now, all the Bitcoin ETFs combined sit around $60 billion. So we've got a long way to go here to become, as relevant as some things like the Qs and the SPYs and some of the bond funds. But, we're well on our way in very, very early days. Nitin, how about your perspectives on the Bitcoin ETF and the significance that it has for this marketplace?
Yeah, so one thing is for sure that for me as a Bitcoiner, original Bitcoiner, Bitcoin doesn't need ETF. I think ETF needs Bitcoin. And one thing that the amount of time I spend in financial industry looking into is to how do we craft a structure which is familiar to the industry. So one thing that Bitcoin ETF does is caters to the institutional sort of investors to have a familiar instrument, have the various market participants who are there and deal with things like collateral management, securities lending that goes with utilizing the asset itself. So there's a whole slew of things, the capital market structure as it goes, the broker-dealers, the custodians, they all have risk model frameworks. And as Anthony described, that I have always classified crypto as a fifth asset class. This is in addition to the 4 asset classes that exist. There's a refined framework. They are fairly mature. And when you bring in something like Bitcoin, the question is that Bitcoin, first of all, as an asset class, is transactionally efficient. We don't have to dematerialize the asset, which is what we went through at some point. it is infrastructure, it is instrument as well. So we don't have to craft another transmission mechanism that the existing financial system has. So it has a lot of natural advantages, and creating a wrapper around it, I think, simply creates a whole structure of fees. But I think it's necessary evil for us to sort of coexist in the interim period before the entire sort of the two systems converge, the existing Bitcoin-based blockchain system and the traditional financial system. So I would say that this whole need to cater to the institutional investors, the pension funds, the hedge funds, and the various institutional sort of familiarity with the asset class and the financial system in general, it adheres to all the risk model frameworks that makes adoption a lot easier. More importantly, for the Bitcoin community itself, it's a legitimacy to asset class that didn't exist before. Second thing, I think it brings a massive amount of capital that's generally good for us to increase the overall sort of market depth of Bitcoin itself as a viable asset class in the long run. So I'm excited about it, but on the long run, I think I'm still a purist when it comes to a tokenized asset class, which is Bitcoin by itself.
Yeah, we're going to get into that later, maybe sort of how this sort of Web 2 infrastructure and traditional finance may continue to evolve into looking more something like a Web 3, and Coinbase is on the forefront of that. Anthony, we'll get to that in a little bit, but maybe, Anthony, you could just talk a little bit about how you're advising your institutional clients on crypto. What are allocations looking like? I mean, I'm sure you're having conversations now that 6 months ago you couldn't have dreamed of having. And that's super exciting from where I sit. And, I have a lot of anecdotes, but I would love people to hear about how you're advising your institutional clients on allocating to Bitcoin, whether that be ETFs or spot. But
Sounds good. Well, I had a dream, and I went to Coinbase to realize it, which was to have this conversation. And so the conversation is happening, and we're having conversations with large allocators all over the world. And the question they continue to ask is, now, no longer is what is Bitcoin, how does the blockchain work, et cetera. It's like, where does it fit in my portfolio? And this conversation is happening across the consultant community as well as the direct investors that are out there, as well as the advisors and the wealth channels. And so you have to look at the data, because it's a portfolio construction exercise. You have to say, is it uncorrelated? Does it help me diversify my risk? Does it help me generate a cash flow stream or some kind of risk that is uncorrelated with other parts of my portfolio? Is the volatility of that asset falling? Right? And that's an important metric, because a lot of institutions can't stomach the true volatility of this digital asset. Am I getting paid for the risk I'm taking? Right? So from a Sharpe ratio perspective, is holding exposure to the crypto asset class, Bitcoin by itself, am I getting paid for that risk? Once you've wrapped your mind around those characteristics and you say, well, it's been, from an asset class perspective, the best performing asset class for 8 of the last 13 years. Last year and this year, it's the #1 performing asset in the world.
Is that good?
It's good. Especially if you're a pension who has to allocate across different asset classes. It's the #1 performing asset, right, relative to equities, markets, et cetera. And so you have to take these factors, is the volatility approachable? And if it's not, right, if you say the metrics and the return profile says I should allocate to it, but my risk models blow up because it's astronomical, you shorten your window of horizon. And what we're seeing is over each cycle of the happening, the return profile is diminishing, right? Volatility is getting smaller, and this makes it more appetizing for people. And this is a sign of the institutional adoption and the maturation of this product category. The conversation we're having now is, do I add spot exposure? Do I do an index? Or do I go active? And the active conversation is a really interesting one for us to start talking about, because there's a number of hedge funds that now have 3, 5, 7-year track records, right? And there's other active strategies in here that actually help you manage volatility of this asset class, because we know it's going to be volatile. It's going to go up and it's going to go down, just like all risk assets do. It's understanding the cycles that happens in, and it's having a plan or hiring a manager to help you get exposure to that space with an intentional strategy around it. So those are the conversations that we're having a lot today, which is, how do you get exposure, right? Is it a Bitcoin ETF where it's passive exposure? And that's where a lot of folks are opting to start their journey. But once you're in that category and you've justified having the exposure, you have to ask the question of, do I want as much volatility in the space, or do I want to manage this in a different way?
So on that point, and I think this conversation, has shifted so dramatically in the last year. It was, for a while, we don't care, we'll look like fools if we're invested, and it's completely flipped. Now it's, we haven't allocated and we look like fools. And so maybe from that standpoint, could you talk about a recent conversation you've had, whether it's hedge fund, long only, sovereign wealth fund, that's really sort of like surprised you?
I was surprised to see, I guess there's a couple things. I'm surprised to see from a data perspective, there are over 400 traditional hedge funds that have crypto selected as an investable category today. Right? These are big names that you can go on and do a Google search and you'll find many of them. That's a really good sign. So that means that they can go to their LP base and they can tell them, we're investing in all the same stuff we typically do, we're also adding Bitcoin to that. That's number one. The second thing was seeing things like a top 10 US pension having made an allocation in Q1 of this year using the ETF. This is something that I worked with many of these pensions in my prior life, and I am not surprised to see them utilize the ETF, but I was surprised to see the level of allocation they made. Right? And I think we're going to see more and more of that. And so tracking 13Fs is a great way to understand how the adoption is taking place, not just in active funds, but also with large institutional allocators.
Yeah, and like we were talking about before, mutual friend Dave Kolk from Reflexive Capital, I mean, he talks about this theme of reflexivity, and you're exactly right. Once you start to see major pension funds allocate and it becomes public, you have this catch-up trade and you have this positive feedback loop in the industry where people who are not yet invested feel this moment like, oh no, like we're not there yet. And that's obviously very exciting. Nitin, can we go back to you to talk a little bit about the intersection of these, institutional players, the more crypto-native institutional players, and then the de novo players like Coinbase and various other market participants?
Yeah, so I think when I was looking into building the entire sort of back-office financial infrastructure, we realized that there are hyper-specialized players, like Coinbase, for example. They provide a set of boutique services. You have the Galaxy Digital, you have the Geminis, you have the Bitgos of the world, who are providing some special aspect of this new asset class, whether it's custody services or collateral management services or simple accounting and taxation services. The traditional finance has a lot of burden of legacy. It's dealing with the whole kind of systems and dealing with connectivity and ensuring that you have regulatory and compliance element being adhered to. So I believe that what we started to do at the time is we begin to offload some of these specialized services to these specialized players, the de novo sort of crypto capital infrastructure participants in general. And you realize that this is the newer model, a hybrid model of sorts, that we begin to rely on that expertise because it is a specialized area. You rely on this whole expertise of the likes of Coinbase, for example, in doing what you do, which is custody services. You've invested a decade long leg up on the industry in general. So that's a great thing, I think, in general, because you speed up the innovation, because it's really hard for financial institutions and large banks to innovate, and I know it. I was then one of them, but it's a great way to sort of partner with these hyper specialized providers and bring this to market, bring the sense of resiliency and the prudential regulation adherence that's required by the asset classes. I think it's a great thing for the industry.
No doubt. I mean, when you were at State Street, you obviously had a front row seat to the antiquation, the antiquated way that these legacy financial institutions do everything, which is layers and layers of management and systems that write over each other. And it's been really fun to watch people like Coinbase come in and kind of solve a lot of these problems. And so maybe, Anthony, we can jump over to you again here. You guys are doing so much, and from wallet technologies to Base, and recently I was at your event in New York, and it was really interesting to hear Brian Armstrong talk about, he basically took his phone out and said, at some point, I want you to be able to operate your life from Coinbase Wallet. And I thought that was like a pretty bold statement that he made that day. So maybe you could, we don't have time for all that, but maybe you could talk a little bit about some of these bigger strategies that Coinbase is employing.
So at the root of all this is it's a technology upgrade. And you'll hear this from us a lot when we're talking about updating the system. And the conversation is exactly the same, whether Nitin's having it or I'm having it at Coinbase. It's about how do we rethink these systems and how we interact with them. I think a lot about the banking system is this core layer of infrastructure that supports hundreds of trillions of dollars of activity for billions of people. And around that, in Web 2, we saw fintechs and neobanks emerge over the last decade that served customers where they're at, which is at the app layer, right? And those fintechs and neobanks plugged into the core banking infrastructure and make it really easy for us to send money around the world today. Now, but it's still challenging and problematic to send money around the world. We have to ask this question. We have to say, if I can send a message through a messaging app to you anywhere around the world and it doesn't pass through any jurisdictional loops, et cetera, it gets to you instantly, and that's just data, can money move the same way? And if you hear what Brian talking about, that idea of using an app to send money around the world, not just data and information and pictures and stuff like that, send things of value around the world in an instantaneous way, that's what we're trying to accomplish, right? We want to make it easy to do this. So still today, if I go and want to, if I have a condo and I want my renter to pay me, they're going to send me money. It's going to take 5 days for it to get to me because the banking system has to clear through multiple correspondent banks or vice versa, or you name it, right? That doesn't work. In an environment where we move things at lightning speed with instantaneous data settlement. So we're trying to speed up money so it moves at the same speed as data. So from an infrastructure perspective, you can think about that as the holy grail and then look at what Coinbase is building. It starts with the exchange to support the adoption of access to digital assets. It extends into safekeeping, custody to support institutional adoption. That allows big institutions with governance and policies to manage their exposure and still support the needs that they have for reporting obligations. We also build staking infrastructure. We also build financing and lending infrastructure on digital assets, spot digital assets only. So we speak Web3 and we can do that directly. We've extended that further into building wallets. And so I like to think of wallets in the same way that we gave computers to people in the 90s. It took a long time to get to 100, then 500, then 1 billion people who had a desktop computer. But eventually it happened, and everyone could access the internet. So we're at I think globally 400 million wallets around the world, right? And Coinbase has a good portion of that. So it's this constant push of the infrastructure that lets people access Web3, and it lets people build on top of it, so new companies are being built. So we launched Base, we incubated Base, which is a Ethereum EVM compatible layer 2. The cost of this, of doing a transaction on Base, is now sub-penny. So we've hit what we call the golden age of blockchain scaling, where multiple layer 2s, multiple other networks are hitting sub-penny transaction costs with high throughput. You can build real businesses and you can handle real payments on these networks now globally. And that's what we're seeing, right? So again, we are core infrastructure. We're building all of this technology, and we're seeing thousands and thousands of new businesses build on top of Coinbase, integrate with our wallet technology, use that to build their business. And that's something that's really exciting. So when we talk about managing your life in the app, you know, that conversation is more about how do we make it easy for you to access all these new things that are going to be connected to Web3, right? And this invokes self-custody, invokes a lot of other things that I know we want to get to.
Yeah, and so, you know, just to make sure that we're connecting the dots here, like, you know, the theme is like a Bitcoin ETF is a Web 2 product, right? And, you know, where this goes in the future, I mean, we've talked a lot about, but like, Nitin, maybe you could just extrapolate a little bit on this concept of, you know, where do we go from Bitcoin ETF? Will it always be around? Will it be as important as it is today? Will it be less important in 5 years or just as important as today, or maybe even more important?
Yeah, so as Anthony mentioned, right, it's a technology. ETF is a technology, and I would say that it's a Web 2 wrapper on a Web 3 asset class in general. So I mentioned this earlier on. Bitcoin is an asset class. Bitcoin is infrastructure. It has its own transmission mechanism. And I would say that when we talk about the notion of being your own bank, which is a common narrative in Web 3 era, well, it's the whole element of, you know, self-custody as we've been discussing. If we were to solve the UI UX problem, the ability for me to access that financial system essentially is what they mean. I don't think, and I tend to disagree on some of the narratives in saying that, you know, hey, can everybody be their own bank? Because in most cases, the masses have to be educated. They have to understand this, and that's a long path. But if you can enable the masses for them to be able to understand what it means to hold an asset on their mobile devices and secure it. And second thing is participate in that financial system, which today is confined to just the large financial players. So things like ability for you to lend your asset and engage in what I call financial primitives, the borrowing, the lending, the collateralization, and the deposits, for instance. you have to build those rails. And I think Coinbase is making that effort to say, if I aspire to move the assets seamlessly around the globe, which is happening today in the DeFi ecosystem. If I'm dealing with DeFi ecosystem, no matter where you are in the world, Uganda, Ethiopia, United States, the access mechanism is exactly the same, except that you need to have a bit more, a sort of a layer of, which is what ETFs provide, a layer of sort of prudential treatment of asset and fiduciary responsibilities of intermediaries. So while blockchain and Bitcoin sort of lead to this disintermediation, I believe that they will lead to creation of new intermediaries, and I see Coinbase and the Geminis and the Galaxies as new intermediaries providing access to new financial sort of systems in general.
So, but are
cheaper, faster, better, of course.
Right, but right now, are Bitcoin ETFs helping in that journey?
Certainly is.
From my perspective, I think it is, right? Like, you can go into your Schwab account right now if you own, when it was GBTC over the counter, there was no LTV. Now we start to see the ability to borrow against your Bitcoin holdings if you hold an ETF, which is much easier to do in traditional financial rails, right? So
two things I would say on this, and I'm super excited about this, because one thing is, it's $1.3 trillion asset class today. And for this to be viable, it has to significantly increase in value for it to be, this is the Bretton Woods 3 argument, for Bitcoin to be a true medium of exchange and pay for commodities and things like that.
Sure.
Second thing is, what ETFs do is education. ETFs gives a sense of participation for not just institutions, but retail, as Anthony mentioned, giving access to retail, so they have the sense of pride, like, I own a piece of this, of this evolution. And that alone is solving its purpose. Leave alone the fact that value comes in, the valuation goes up. Bitcoin itself becomes from 800, before the ETF it was 800 billion, and after ETFs, $1.3 trillion asset class, which I think is significant for the industry.
And that, and as the asset class grows too, like, to revisit volatility that Anthony was talking about before and institutional adoption, like, it helps with all these problems that we solve. And it makes all these conversations with institutional clients, whoever they are, much easier. We have a couple minutes left, Anthony. I know you're passionate about this, straddling this line at Coinbase and between Web 2 and Web 3. And I love Nitin's line about Bitcoin ETF being a Web 2 product wrapped around a Web 3 asset. So let me give you the last couple minutes to sort of give your 2 cents on that.
So I think at its very heart, I mean, there's a lot of conversation around Bitcoin representing certain fundamental rights and something about freedom, et cetera, et cetera. And so there's, we try to be very unbiased in our views. But we're building technology to give people access, and they get to choose how they want to gain exposure. And when we talk to our clients, same conversation. It's like, here's a lot of different options, and we can help you think through each option in terms of having exposure. There's another conversation around your choice of like really how market structure is forming, and it has to do with self-custody, and it has to do with your ability to kind of retain the asset on your person, or at least in your own, to Nitin's conversation, like be your own bank to some degree. And I want everyone to imagine a world where you no longer have to go to centralized institutions to get the services that you need, right? You hold all of your assets in a digital format in your name, and you can choose specialists because your wallet connects to connected applications across a network of options. And so from a self-custody standpoint, this is why it's critical. When we talk about the democratization of access, ETFs democratize access to more complex strategies. But there's a limit to how many people have access to that. And so now when we talk about blockchains, we're now expanding democratization of access for people who are anywhere around the world, as long as they have a phone, access to the internet, and they can access a digital an application on Web3, they're able to get services directly in their phone to their assets. All right, so if I want an advisor to manage my Bitcoin, I can select an advisor to help me with that in my self-custody wallet. If I want someone to help me with my stocks, I'll be able to connect specifically for that. If I want to have somebody help me with a different asset class, I will be able to connect my wallet to help me with that. And I think in terms of market structure, that the self-custody aspect of that technology connected to Web3 is going to be an absolute game changer in terms of how people hold Bitcoin and how they choose to interact with centralized institutions versus not doing it themselves.
Yeah, thanks. There's obviously a lot more that we could talk about there, and I urge everybody here to find Nitin or Anthony or myself later, but mostly these two guys are a lot smarter and more knowledgeable than I am about this stuff.
That's not true.
And we'd love to connect with everybody. We're out of time, but thank you all very much and looking forward to seeing people.
Thank you.
The Bitcoin Conference. We started with a dream to build a community focused on Bitcoin. It all started in 2019 in the heart of San Francisco, the first major Bitcoin conference in years that kickstarted a revolution. And then Miami, a place where enthusiasts, developers, dreamers, and innovators could come together to make Bitcoin better. It has been an amazing 5 years and 8 conferences, thanks to all of you. Bitcoin Conference has become the largest premier global Bitcoin gathering in the world, leading hyper-Bitcoinization. While Miami was incredible, it was time to set the stage for Bitcoin in a new city. So we took the conference on the road. Nashville, Tennessee was the obvious choice, a city known for music and freedom. Next year, the conference is hitting the road again in search of the next global stage. We are headed to a new city next year. With hyper-Bitcoinization right around the corner, we have no plans to take the foot off the gas. Find out where we are headed next. Scan the QR code and be at the main stage for the big announcement.